back on financial institution and capital market class. This is our first video about financial institution and capital market on this channel. So, enjoy watching, hopefully useful for you. Now, before we get into the material, I want to ask you something important. If I say financial institution, what's on your mind? Bank? Or there is something else on your mind? Most of our people, when they hear the word financial institution, must only be focused on banks. Because banks are a place for storing and lending money that has spread widely in our society. It is true that a bank is a financial institution. But actually, a financial institution is not just a bank. But there are other financial institutions that we usually call non-bank financial institutions. Okay, then before we dive deeper into bank financial institution and non-bank financial institution, I will discuss about financial institution in general first. So, financial institutions are institutions that provide financial related services to the wider community. The general form of these financial institutions are banking, building society, or sometimes we call it a type of cooperative, credit unions, share receivable, insurance, and many more. The function of this financial institution itself is to provide services or act as an intermediary between the owner of capital and the money market, where they have the responsibility of channeling funds from investors to companies that need these funds for their needs. With the existence of financial institutions that facilitate the flow of money in the economy, the money from investors will be collected in the form of savings to the risk from investors shift to financial institutions, which will then channel the funds in the form of loans to companies or organizations in need. The process of this loan, financial institutions will earn income or profit in the form of interest of a few percent of the amount of money they lend. Okay, now we will enter into a discussion of bank financial institution and non-bank financial institution. First, you should know about the definition of bank financial institution and non-bank financial institution. Bank financial institutions are financial institutions in the form of banks. Banks are financial institutions that collect public funds or receive money deposited from the public, which will then be distributed to people who need funds in the form of credit or money lending, and also issue promissory notes or bank notes to improve the standard of living the wider community. Then, what is the purpose of establishing a bank? Only for a place to save and borrow money? No. So we have two purposes for establishing a bank. There are, first, providing an efficient means of payment for customers, and the second, increase the flow of funds for investment or more productive use. Next, we will discuss about non-bank financial institution, which will be the main subjects of our course. This non-bank financial institution doesn't mean that this financial institution doesn't carry out financial activities as done by bank. It's just that this non-bank financial institution is an institution that provides services in financial terms, but is not a bank. This non-bank financial institution can also attract funds from the public but indirectly, such as financing institutions consisting of leasing, factoring, consumer and credit card financing, insurance, and many others. This non-bank financial institution institution was established with the aim of encouraging capital market development and to help capitalize companies with weak economics. Currently, the development of non-bank financial institutions is not inferior to bank financial institutions. It may even continue to grow along with population growth. So, from the explanation I have given regarding bank financial institution and non-bank financial institution, do you know where the differences between the two institutions lay? So, the two institutions clearly have several differences, including first, bank financial institutions carry out more comprehensive activities compared to non-bank financial institutions, namely collecting funds from the public and then channeling them back in the needy people, as well as providing other financial services such as buying and selling securities and so on. Meanwhile, non-bank financial institutions, its company only focus on one activity of the company. For example, insurance companies. They only focus on providing dependency services to people who are a member of their service. Another example is a pawn shop companies. They only channel loan funds to people in need in with certain guarantees. Then second, bank financial institution can directly create demand deposit which can affect the amount of money circulating in the community, while the non-bank financial institution can't do this. And the last is bank financial institution can collect funds in the public directly in the form of demand deposits, saving and time deposit. Meanwhile, non-bank financial institution can directly collect funds from that form. So, these are some of differences between bank financial institution and non-bank financial institution. So, now you can well consider if you want to save your money, whether at a bank financial institution or at a non-bank financial institution. Because each of these institutions certainly has its own advantage and disadvantage. So, this is my last question in this video. Which institution would you choose to be entrusted with depositing funds? You can answer in the comment box. So that's all the material in this video about bank financial institution and non-bank financial institution, which is non-bank financial institution is our main subject in our course. So the next videos we will discuss more about the non-bank financial institution. So thank you for watching the videos. Don't forget to like, subscribe and comment my YouTube channel. Okay, we'll see you in the next video. Thank you and bye.